Hey, hi everyone. Welcome to another video. So today we'll go through US hedge fund structures and how top hedge funds in US structure themselves, and what is the tax optimization that they get through their structures, and how they reduce the transaction costs and the taxes by using those structures. So most of the US hedge funds are structured, basically as limited partnerships. Okay, and common structure which they use is basically a master feeder structure. So a master fund is established in offshore jurisdictions, generally tax neutral jurisdictions like Cayman Islands and British Virgin Islands, Bahamas, Bermuda. And this master fund holds all the trading positions and generates the profit and loss, okay, for the uh, fund. And this master fund is established in generally Cayman Islands and BVI. It's called a master feeder structure. Then an onshore feeder is also there, which is taxable in US, and it could be a LLC or a LP. And this is for US taxable investors. This onshore feeder would be there. Okay, so this onshore feeder will feed the money into the master fund. And master fund is in a tax neutral jurisdiction, and it holds all the trading positions and P&L. Offshore feeders are also there. These are blocker corporations for non-US and US tax exempt investors, to insulate them from US tax filings. Offshore feeders models are also there. Okay, why this structure, this master feeder structure, most US hedge funds follow is because this ensures a single pool of money for trading, and this single pool for trading, improves efficiency. And this onshore feeders are pass through entities basically, and basically preserving favorable US tax treatment for investors. Offshore feeders block US tax for foreign or tax exempt investors. So that's why this structure is used, which is a master feeder structure and an onshore feeder and an offshore blocker feeder. Uh, Efficiencies are achieved through this, and it's onshore feeders are just taxed as a pass-through entity, and the non-US investors are basically exempted from US tax. So tortured geography or offshore domiciles. So Delaware is generally used for onshore feeders or blocker corporations. So most hedge funds are registered themselves in Delaware, but offshore domiciles also are there. Cayman Islands is the number one hedge fund hub. 85% of global hedge funds are there in Cayman Islands, and assets under management are there in Cayman Islands. British Virgin Islands is also a popular one for feeder, blocker, and segregated portfolio company structures. Okay, Bahamas, Bermuda, Mauritius, Panama, Switzerland, Dubai, DFC, Singapore are chosen for zero tax status, regulatory appeal, and treaty access. So what do they get by this master feeder structure is tax reduction and efficiency mechanism. So no fund level offshore taxes there in all these Cayman Islands and British Virgin Islands and all those. This offshore funds income, no income tax, no capital gains tax, and withholding tax in their in their home jurisdictions. So no fund level offshore taxes there basically. Pass through benefits are there, which is US investors in offshore feeders receive direct allocations of gains or losses, and they're only taxed on capital gains rate, not at the fund level tax. Blocker corporations, these are used by non-US or US tax exempt investors to prevent US tax filings or unrelated business income, taxable income. Carried interest, that's another benefit, which is managers typically receive carried interest taxed at favorable long-term capital gains instead of ordinary personal income. Offshore compensation deferrals is another one. So use of offshore arbitrage historic allowed compensation deferral, though regulations have tightened now. So that's the thing. So they get all these advantages, pass through benefits, blocker corporations, no fund level tax, carried interest you could do, offshore compensation deferrals could be done. Transaction cost efficiencies are there. Single master fund is there, so that's very cost efficient. Economies of scale is there. So bulk operations, reduce the ticket counts, margins, as well as the brokerage fees. Economies of scale is there. Large pool of capital attracts, good brokerage terms. and tighter spreads and lower slippage. Favorable execution entities are there. These offshore accounts execute globally without triggering, onshore VAT, stamp duties, or other local taxes, transaction taxes, or costs are also reduced. Regulatory nets offshore blocking avoids withholding on U.S. dividends to foreign investors, common in U.S. equity funds. The summary is master fund is a structure used by most hedge funds in US. Offshore, they'll have a master fund in Cayman or British Virgin Island, which is a tax neutral central trading hub. US feeder would be there, LLC or LP, which is pass through for US taxable investors. Offshore feeder would be there, which is a blocker corporation, shelters foreign or tax exempt investors. Tax optimization is carried at 20%. No fund level offshore taxes are there. Efficiency gains are there, bulk trades, economics of scale, prime broker advantages are there. Common jurisdictions like Cayman Islands, BVI, Bahamas, Bermudas, Mauritius, Singapore, Switzerland offer common jurisdictions. So leading firms like LTCM and most of hedge funds use Cayman Islands, master offshore feeder setups. And there's ProScare, a major hedge fund law firm, which outlines benefits in centralized trading, cost savings, and customizable fee structures. And, SCG fund services and harness also note that US fund managers use blocker feeder models for compliance across investor types. So all in all, final takeaway is, this offshore master feeder structures, often in Cayman and with onshore US, deliver tax transparency for US investors, shield non-US investors from US tax reporting, and optimize this manager compensation via carried interest, reduce execution and trading costs through operational scale. So that's the advantages of, that's how, US hedge funds are structured, and those are the advantages of structuring in that way. Thanks everyone for joining the call. Have a nice day. Bye.